issues. Welcome to our webinar, and what we'll be looking at today is what will Brexit bring for Christmas this year. So, my name is Paul Langston, and we've run a number of these which I know a few of you will have been at before. Okay, now that we have entered that critical Christmas period, Christmas trading period, we thought it was right to give a reasoned view on the shopper confidence of UK consumers. Now I stress that point of reasoned, as we've seen an awful lot of headline-grabbing comments about consumer confidence since the Brexit vote in June, swinging from despair to positivity via ambivalence. Now, we and our partners at BPS have intentionally held back from joining the debate until sufficient data has started to become available to draw some reasonable time series trends. I'm looking forward to walking you through these trends over the next 20 minutes or so. However, I think it's worth noting that anything that is happening is not going to be a steady trend for the foreseeable future, as we attempt to navigate a path through our European divorce, and then we throw in a bit of global uncertainty and the unknown Trump effect too. So, we will be back to you in the new year to give you an update. Now, for those of you who have attended a number of these sessions, I've changed things around in the structure a little bit to reflect the longer trend of data since our last webinar, and to look more systematically at how the different Acorn groups are behaving in these unprecedented times. So this month, I'm not going to end up with that usual focus on the brands and places most impacted within a single Acorn group, as I think it's important this time that we look at the broader time series trends. And as ever, please post any questions as we go along, and we'll seek to address them at the end. Now, as ever, I do need to start with a very brief introduction and apologies for those who've joined us previously. Now, we've been working with our friends at BPS, that's the British Population Survey, for over 6 years now to track shopper confidence on a monthly basis. The analysis is based on the BPS asking a large and demographically stratified sample the same question each month, which is this one on the screen. Thinking about your financial situation at present, how do you think it is likely to have changed, if at all, in 3 months' time? Now, what we do is we look at the net differences between those saying better versus worse and track this as a positive or negative percentage. Now, the key difference of our approach to monitoring confidence is that whilst the headline shopper trend is interesting, our Acorn classification enables us to look at the trends below the headline rate to see how different consumer groups are thinking. It is also worth stressing that to ensure that the trends are robust and don't show too much monthly swing based on knee-jerk reactions, we do include an element of smoothing using monthly rolling figures. Okay, that's enough intro. Now let's look at the headline trends before we drill into those demographic variations. Now this month I think it's worth starting with that long-term top-line trend to put in some context what's happened since June. Now, many of you will have seen this stuff on the left-hand side of the chart before. You can see the decline here, if I use the mouse, so you can see the decline of confidence since the coalition government got elected in 2010, with confidence turning negative for a long period of time into what was originally called the double-dip recession. Then we saw the false dawn of confidence rising around the Olympics in 2012, and then the steady growth since December 2012. Ever since when confidence has been in positive territory, reaching a peak in March 2015 of plus 12%. Now, between March 2015 and March 2016, confidence has remained very high, oscillating by just 2 percentage points as confidence seemed to hold remarkably steady, even holding off and offsetting the usual seasonal variations in confidence, which typically rise in the summer and fall in the run-up to Christmas. Now let's add on to the right-hand side the 7 more turbulent months into and out of the EU referendum. At this broad trend level, you can see that we've seen a marked decline in confidence in those last few months, but it has not been a huge crash as some had feared and some had threatened. We've dropped to a plus 9 percentage points, which, to put things into context, is still only 3 percentage points below the 2015 high. So we are still in massively positive territory. People are still saying their finances will be better in 3 months' time. So don't forget we were in a negative position for a solid consecutive 20 months not that long ago. during a period when the UK on average thought their finances were going to get worse. Now, when we apply our smoothing to avoid perhaps false single-month knee-jerk reactions, we see that it has been a fairly steady, gradual decline in confidence, perhaps as the layers of what Brexit means only slowly become clear. However, as we shall see shortly, there has been a considerable divergence amongst different demographic groups. Firstly, so that you can stop straining your eyes, now that I've shown the context, let's look at the recent period by zooming in on the last year of data. To the left, you can see the gentle decline in confidence to March that I reported on in our April webinar, as shoppers appeared to grow concerned about the possible consequences of the referendum. From then, intriguingly, headline confidence grew slightly to the time of the vote, before holding steady just below the plus 12% record for all three of the months of May, June and July. As the June BPS data was collected days before the referendum, what we are seeing here is that, at an aggregate level, consumers maintain their confidence immediately before and after the vote. After all the negative campaigning and with so much uncertainty, this is perhaps surprising, and we shall investigate soon whether this is masking divergence by different demographic groups during that period. After July, confidence seemed to gradually decline, as the reality may have started to hit home, to end at plus 9% in October. Now, looking at this chart, it appears that consumers' response to the uncertainty has been pretty measured. However, it should be noted that the last time that we saw a 3 percentage point drop over 3 consecutive months is as far back as the decline to November 2011. Now, at that point, confidence tumbled from -4 to -8, so it was actually a 4 percentage point drop, and that led to a painful Christmas in Christmas 2011. So, this is a sizable drop, but please let's not forget we are still very much in positive territory. But, to give a further note of caution, remember that I've mentioned on a number of occasions on these calls that we expect to see seasonal trends. So, to overcome these, let's quickly look at the last 12 months in terms of year-on-year change. This chart compares the headline confidence to the same point 12 months before. So the left 12 months I've intentionally left blank because there was nothing to compare to. The period to November to December 2011 is all below 0% because this reflects the long period of declining confidence that I showed on the previous long-term trend chart. This was then followed by a nice long positive period above the line with 4 years of improving year-on-year monthly figures. However, what we can see to the right of the chart is that confidence this October is now 2 percentage points below where it was in October 2015. Focusing on this recent right of the chart, what we are seeing here is that whilst confidence may still be good, from February this year we have seen the first negative year-on-year figures since that difficult 2011 Christmas. In February, March and April, confidence dipped below the previous year's level. We then seemed to hold our breath, it went a bit positive again into the referendum, and since then year-on-year confidence has moved negative again, dropping to that -2% in October due to the continued uncertainty. So in short, at a national picture, what we are seeing what many had stated, that confidence has been rocked, but it certainly has not fallen off a cliff, as the population as a whole await a clearer understanding of what Brexit really means. But, as you're aware, at CACI we have the advantage that we can get behind these averages and see how different consumer groups are really behaving by analysing the different responses of our different Acorn segments. So let's look at the last 6 months across each of our 5 broad Acorn categories. But before I spend the remainder of this session talking about the differences in shopper confidence, I think it is worth a very brief pause to familiarise everyone with the basic Acorn structure. Every postcode in the country is split into one of these 5 broad Acorn categories, whose names pretty well sum them up. They broadly go from most wealthy at the top, that's the affluent achievers, to the most economically deprived at the bottom, the urban adversity. Most of my analysis today will take place at this broad Acorn category level, but on a few occasions I'm going to drill into the component Acorn groups, which are on the screen now. There are 17 of these, and they give us slightly more refinement when we look at the segments of the population. Again, their names give a broad steer of their dominant characteristics. Now, to avoid the need for me to explain the nuances of each Acorn group, and also to set some useful context, let's start by looking at each group's typical voting behaviours in the EU referendum. Now, this chart is based on us comparing the local results of the referendum to the Acorn makeup of each constituency and aggregating them to a national level. The blue bars to the right tended to vote to leave, and the yellow tended to vote to remain, with the size of the bar reflecting the relative majority. Now, I could spend a long time on this slide, and we have already tweeted it, and we will be putting this deck up on our website. But what it does show is broadly consistent with perceptions at an Acorn category and group level. The most affluent at the top of the slide generally voted for the status quo, with the exception of the mature money, the third one down, who also just so happen to be the biggest readers of the Daily Mail. The only other groups that predominantly voted to leave, the only other groups that voted to remain were struggling estates at the bottom, which are found in many of our larger towns and cities, and the young group here of student life. Now, what is particularly noticeable here is in the middle ground of the comfortable communities. Here, whilst the scale of the majority varies by group, all groups tended to vote to leave the EU. Now, given the size of this middle ground, it is perhaps not surprising that the balance tipped to an exit vote. Right, now that I've explained Acorn, let's look in more detail at the analysis. As ever, this first chart is a busy one, so I'll try to animate it to help you as we walk through the changes at an Acorn level. What you are seeing here is one bar per Acorn category with their confidence score per month. Now, the first thing to note, if you compare June to July, is the remarkably uninteresting July. Despite what was expected to be a big political jolt, nothing actually happened other than political infighting. There was a mistake. Yeah, so whilst we expected a big jolt, what we actually saw was no real change in confidence at Acorn category level. No Acorn category moved by more than 1.5 percentage points either way. Rising prosperity and comfortable community consumers moved by less than just 1%. Now, there did seem to be a minor affluence shift. The two least affluent Acorn categories saw a 1 percentage point rise in confidence. In contrast, the most affluent, the affluent achievers, with perhaps the most to lose from uncertainty in the financial markets, saw a 1.5 percentage point drop. But in short, in July, the headline figures actually didn't really mask anything in this case. It really was a month of the whole population playing a waiting game, holding our nerve and waiting to see what was going to happen. But there have been much more interesting demographic changes since July, and to really understand these, we need to look at each category in turn, and that's what we're going to do for the next section. Let's start from left to right, or in other words, more affluent to least affluent, as we work through each of the Acorn categories. Starting with the affluent achievers. Now, despite being the only Acorn category to have registered a measurable decline in confidence in July, the affluent achievers have actually ended October with a shopper confidence only 1 percentage point down from the eve of the referendum at +9%. However, they dipped just below +7 in September, dropping 3 percentage points over 3 months, as they maybe started to have serious concerns about the impact of Brexit on their finances. But the 2 percentage point recovery in October could potentially be seen as an encouraging indicator of the robustness of the economy. Remember, most of this category voted to stay, and remember these are a financially savvy bunch who appear to have actually taken a relatively positive long-term view despite their concerns initially. Now, to give further reassurance, I also note, but I haven't shown it on a slide here, that on a year-on-year basis, affluent achievers are now 1.5 percentage points higher in confidence than they were the same time in October 2015. Now, that's a pretty decent recovery considering they were down year-on-year in September. Now, in stark contrast to the relative stability of the affluent achievers, rising prosperity witnessed their biggest single-month drop in confidence since March 2013, from July to August. This was a single-month drop of 6 percentage points. Now, whilst the rate of decline has slowed, it is concerning to see that that fall has continued, and the 13 percentage point drop since July is their biggest since their fall to March 2011, when the economy was seriously struggling at the time. This drop is also the third biggest 3-month drop in confidence by any Acorn group that I've reported on since we started tracking this data in 2010. So clearly, this group, whose political and economic leanings made them the most likely to have voted to remain in the EU, have started to fear the reality of a Brexit a month after the dust settled from the vote. On a year-on-year basis, the rising prosperity category are now 7 percentage points below their level in October 2015. Now, this is no great shock given the voting behaviour of this group. And actually, what is potentially more surprising is the fact that they still remain so strongly in positive territory at +9, and that their confidence actually remained at a record high as late as July. So if any group was not expecting a victory for the Leave campaign, it's the rising prosperity. This is reflected by the climbing confidence just in advance of the vote and then that slump afterwards. But they have clearly seen enough since the vote to have lost their booming confidence. But on that more positive side, they have just dropped back to maybe a more sustainable level of confidence, similar to where they began the year. However, we do need to keep monitoring to see whether this downward trajectory continues. Now, before we leave the rising prosperity, let's drill into this Acorn category a little further by looking at the 2 component Acorn groups that make it up. Here, we see subtle differences between the 2 component groups. Both city sophisticates and career climbers followed the same path of rising confidence up to the vote, but whilst they've both seen a fall since, the patterns have diverged. Now, encouragingly, in terms of overall retail economy, the bigger spending city sophisticates have dropped relatively little. The fact, though, that city sophisticates alongside the previously discussed wealthy achievers are perhaps the most closely monitoring the state of the wider economy, we should be encouraged that they are still registering confidence levels of +13%. On the other hand, career climbers who are slightly younger and more junior have seen the bigger drop and have dropped back to their lowest level of confidence since December 2013. But this is perhaps unsurprising, as it is a big step into the unknown for a group who've grown up entirely within the EU. Let's leave the rising prosperity behind and look at the middle ground. That's the comfortable communities Acorn category. Here we see a rather concerning trend in the last month. Now, whilst the drop in October of 3% is not enormous, it is their biggest monthly fall for over a year and means they end the period more than 2 percentage points down on this time last year. This may be a blip, but I must stress that these are smoothed figures, and actually the unsmoothed figures show a fairly dramatic drop in October. We've seen such blips before and sometimes they don't come to anything. But a big drop in confidence amongst this group could seriously flag serious future risks for the UK economy, and especially mid-market or mass market retailers. Now, what's particularly intriguing about this bunch is that our analysis of broad voting behaviours in the referendum that I showed earlier showed that each of the Acorn groups that make up comfortable communities actually voted on an aggregate basis for leaving the EU, so they got what they wanted. So before I drill into these component Acorn groups of the comfortable communities, let's remind us of what they are and how they voted in the referendum very quickly. Yes, whilst the scale of the majority may vary by group, all of these groups, I must reinforce, tended to vote to leave the EU. But despite this broad agreement in voting sentiment, we will see very different trends when we drill into their responses to the shopper confidence question. If we drill into the 5 component Acorn categories, what we see again is a very busy chart. But what it shows is some fascinating patterns hidden behind the broader Acorn category. Firstly, we see countryside communities becoming the first Acorn group to move into negative territory since they and the comfortable seniors briefly dropped negative in October 2015 in response to concerns over continuingly low interest rates. Now, with the number of out signs that I witnessed in rural areas in the run-up to the election and what we saw on the previous slide about their voting tendency, this is potentially a surprising response. The surprise is further compounded by the fact that their rise of 3 percentage points in July, immediately after the vote, was the biggest of any Acorn group except the seasonally volatile student life. So this group looks like one that was expecting to see more positive change as a result of the out decision, and is potentially changing their views. Now we can speculate on the reasons for that. Is it about the relatively slow pace of change since the referendum has been a disappointment and frustration? Is it that a further cut in interest rates was an undesired outcome for this group who have amongst the highest reliance on savings investment? Or is it a realization that cuts in EU funding could have a greater impact on rural communities than they'd hoped? Now, whilst the big drop in confidence in August when the interest rate cut took place may point to the second of these theories, it's slightly contradicted by the comfortable seniors, who actually saw an increase in the same month. Now, traditionally, the comfortable seniors group, dominated by retirees, has been very volatile in response to interest rate cuts. However, the fact that they dropped back 7 percentage points at the end of October may just mean it took longer for the reality to hit home for the comfortable seniors. Now, further analysis of this graph shows just how confused the country is about the future of their finances. Whilst our broad Acorn categories are meant to be as homogeneous as possible when you classify an entire population into just 5 segments, there are very different patterns going on in these component groups, and let's just spend a few minutes looking at them. So, whilst countryside communities and comfortable seniors saw an initial rise and then a drop in confidence since the vote, and a fairly similar pattern, albeit at a higher level of confidence, was seen by the younger starting out, a group dominated by young couples in their first homes, we saw a different shape here. Successful suburbs who live in stable areas of suburban Britain went in the opposite direction. They saw a 2 percentage point drop in July and August, and then they climbed in October by 3 points. Now, this seems to reflect the opposite sentiments to their Acorn category neighbours. These suburbanites seem to have gained some reassurance that things were not as bad as maybe they'd feared. However, more alarmingly, steady neighbourhoods, the biggest and the most middle Britain of all Acorn categories, Acorn groups, has seen an alarmingly steady month-on-month decline in confidence since the latter days of campaigning in May, to drop to just plus 3% in October, their lowest since December 2013. Now, to see successful suburbs and steady neighbourhoods going in such different directions is fascinating, as demographically these two groups are so similar. The only real difference between the two is that steady neighbourhoods are slightly less affluent and slightly younger than the settled suburbia. But then again, after recent voting shocks, nothing should surprise me now when I look at people's behaviours. Now let's get back to the 2 final broad Acorn categories. The one broad category to have finished the period up on the pre-referendum levels is the financially stretched. This is no great surprise, as our analysis of voting behaviours shows that all of the component groups except student life voted strongly to leave the EU. Perhaps what is more intriguing is the fact that as an Acorn category as a whole, they haven't exactly gone wild with excitement about their financial prospects. Over the pre- and post-referendum period, they have not moved by more than a percentage point in any month. In fact, it never does. They haven't shifted by more than a percentage point for 15 months. So it does seem that the financially stretched may have wanted to leave the EU, but they never really expected it to impact their finances immediately, and quite frankly, it appears they've been proved right. And the final Acorn category before I wrap up. At the bottom of the income spectrum are the urban adversity, who, if you recall, generally voted to remain in the EU. Perhaps then it's not surprising they've headed into a trend of decline in confidence. As a category, the urban adversity often confound logic. They have for many months been showing consistently high levels of confidence, and this does sometimes raise the question of how useful a measure they are of economic sentiment, as they appear to have a belief that things will always get better. So it could be argued that the 7 percentage point drop in confidence to October is really something of a reality check. And again, we must remember they are still reporting strong positive confidence even after this drop. But the fact that this is their lowest level since June 2014 and their biggest 3-month drop since April 2012 does show that there is some serious concern mounting for the country's least affluent households, and it's worth noting that all 3 component Acorn groups are sharing these sentiments, whether they are young hardship, struggling estates, or poorer pensioners. Now let's wrap up and summarize. Let's start with the positive. All Acorn categories are still in pretty strong positive territory. This is despite a small but significant headline fall. But we have seen an encouraging recovery from the affluent achievers who, despite having generally voted to remain in the EU, seem to be playing a long game in response to the uncertainty. But the previously very confident rising prosperity have seen their confidence knocked. Whilst their drop in confidence has been considerable, they are still reasonably buoyant and have now fallen back in line with the majority of the population. And this is a similar pattern to the lowest income urban adversity category. But potentially the most surprising and concerning points are found in the middle of the economic spectrum. Here there seems to be a divergence of opinion about our financial outlook. We've seen very similar Acorn groups moving in all sorts of different directions since the referendum, and an overall drop in confidence. At the moment we are continuing to see a very mixed picture overall. And I would summarize that retailers should prepare themselves for a tricky Christmas again. But things could have been a lot tougher with the political shock of the last few months. And overall, the outlook is moderately stable, considering everything that's happened. Now, we'll be continuing to monitor these ongoing trends over the critical trading period, and we will report back early in the new year. Next time, I hope to return to the normal format of focusing in more on a single small number of Acorn groups and their specific retail habits and the brands and places like to be impacted. I hope the broader approach today has given you a taste of the state of the nation's shoppers and given you some useful insights that are hidden at the national picture. Again, I apologize for the slight delay at the beginning. Please post any questions that you have, and we'll look at answering these now. Thank you for your time.